Good morning, Gene Inger. Quick video comment here for IngerLetter.com MarketCast members at around 11:30. Stocks are climbing, led by technology, Intel, some of the oil stocks. People, I guess, happy that service industries have expanded at a slower pace amid the housing market slump, but the oil action, which is helping the averages, is not necessarily good for the consumers. A lot of people talking about the Fed combining the rate cut with new measures to increase credit, and subprime rates may be fixed for several years. You do realize what that means about the overall economic situation, as we discussed in the text portion of IngerLetter.com's remarks last night, and as we discussed periodically, having been among the few who forecast a liquidity crunch and credit squeeze, if you will, coming out of the situation from last summer, while forecasting that spike rally. Meanwhile, intraday here, as we look at this market at 1487, we are going to, by intention, go back to the short side of the ledger. Obviously, the first effort did not pan out, but that's okay. What we're trying to do is fade the spikes and buy the declines. But here, what I want to do is an 87 guideline short. We don't give trades, just guidelines, with a fixed metal stop, very tight at 89. If that comes out, we will go flat, trailing a 1-point sell stop and 2-point autopilot. Otherwise, I'll comment more about this in no more than an hour from now when I return with my next comment. Meanwhile, when we look at the daily basis chart of the S&P, you can see why this is a tough spot. We had what maybe looked like a little dome, came back down to the daily moving average, has this fling up. So is this now, as I've described it nightly in my remarks, as an ABC rally, or is this a failure? I think it's an ABC rally, but I think that some of the data is being misinterpreted in a favorable way because people think that this means somehow we get out of the mess quicker rather than later. But it is a seasonal time of year when we've absolutely backed off from any stubborn bearishness. That's been the case for a couple of weeks now, and appropriately so. And nevertheless, we are open-minded to this spiking up here and concluding in the 1500 area of the S&P to be determined. Meanwhile, a quick look at a daily basis chart of the Dow up 180 points just now shows how we, on a closing, if we were to finish here, we would be at a new high, trying to challenge the high of the other day. On an intraday basis, let's look at a 5-minute chart. We are flirting and at the essentially the highs now. Transports are up 79 points. The NASDAQ 49. The semiconductor index 12. The dollar index up 0.57. Bonds are down 16 as rates firm, and that's what rates do when everybody gets crazy about wanting them to go down. Think of the implications domestically and internationally, though we called for the dollar to firm, as you know. Crude oil up 44 cents or so at the present time. Oil index up 25, and that is part of your senior average move. Gold declining by 7:30 this morning. As we look at a few individual stocks, Citigroup up 87 cents, JP Morgan 73 cents, Merrill Lynch up 48 cents. As an example, we've been bearish on Merrill since the 90s. We are certainly not going to increase an attitude of bearishness towards this stock. As an example, we have said we might look at it, that we thought it would go into the 60s, then the 50s. We might look at it in the 40s. There's no change in my view, and my comments about liquidity and solvency are addressed in the comments. As far as speculative, little stocks, little tiny pure bioscience acting very well, and as this develops and matures, we think as a speculative investment for that portion that some people may consider appropriate for speculation becomes very interesting as a lead antimicrobial against MRSA staph, norovirus, and other pathogens over time. We'll see how that develops. Meanwhile, we will return with my next comment next hour as noted. Pattern expectations, spike, flop, bounce, and we'll see if it fades or holds later on. Good afternoon. Good morning.